Hey guys, hope you had a great weekend. This is Taylor from thetradinganalyst.com. Thank you for stopping by. So the point of this video, we are going to discuss some bearish plays that I'm going to be watching for this week ahead. Now, you might be thinking, well, Taylor, you're bullish on the stock market. You have so many bullish plays. This is totally true, but I am finding a few weak links here. Not all stocks go up and not all stocks go down at the same time. So the other thing too that I like to do is if I'm very long the stock market, I like to have a few shorts on the weaker stocks just to kind of, not as a hedge, but just as a way to balance out the portfolio. For on weaker days in the market, the shorts tend to perform better. So we've got the first one, GameStop, GME. First and foremost, who the hell gets their video games from a store anymore? Not many people. So they just had an earnings reaction right here, and it headed lower. But I first want to talk about the fact that this stock has been in a downtrend for years. Okay, for years. You want to be longing stocks like Apple, who's been in an uptrend for years. You want to be shorting stocks that have been in downtrends. You want to be going with the trend, not against it. Okay, so we had this major gap down on huge bearish volume back here, headed lower, and then essentially we traded sideways right here. And I'm going to go over the setup. Okay, so what we have here is, first and foremost, a break of this uptrend line. All right, very simple stuff. Then what we have, I'm just going to delete that to make it simple, is we had this resistance right here. You can clearly see it right about there. All right, right about here. Okay, there's that resistance. Resistance, here it is again, resistance. We broke over that, retested it several times successfully, but now we're below it. Okay, so this, you can consider this a false breakout. Okay, and we didn't know it was going to be a false breakout until we actually broke back below this level. Okay, so we gapped below it on an earnings reaction. Okay, earnings move stocks. Very, very important to remember that. Okay, I think either, let's see, the last earnings reaction was right here. And as you can see, we headed higher since then. It went from about 420 to 660. I mean, that's like a 50% gain, something like that, all after earnings. Okay. Now we have this recent earnings reaction, and we are currently short on this one. And I want to kind of zoom in so you can see it better. But here's that support that we're below. The other thing that I like too is that we had this gap down and this green close. The next day was another green close, but notice the next day right here closed below the previous day's low. Okay, so that's, to me, just more confirmation that this is a bearish stock. Okay, so that's GME. The next one is Work. This is Slack. And this is another one that, you know, I personally, maybe other people out there may disagree with me, but to me, I know that, you know, there's a lot more to it than just, it's not just a chat room, but to me, it's really just a chat room. I personally use Slack, but I don't pay for it. And most of the people that I know that use Slack don't pay for it, and I think that a lot of people, there's a lot of other competition out there, and when all you have is one thing that can be easily replicated, to me that's not a sustainable business. Again, I focus on price action. That's what we're going to be discussing right here, but I just kind of use some common sense stuff, just like I did on the GameStop. To me, it's just like a blockbuster. Okay, so anyways, Work. What we have here, first and foremost, this stock has done nothing but gone down since it IPO'd. Here's the IPO. Boom. Nobody wanted to own it. Straight down, straight down. You can come up with whatever excuse that you want, okay? But the fact of the matter is that is extremely bearish, okay? Big downtrend. Then what we have here recently is wrong tool, is a uptrend line break right here. So here we are, a little uptrend here, had its chance to kind of break over this resistance right there, but couldn't do it. The other thing that I want to focus on too is, I'm going to zoom in a little more for this one, is this day right here, okay? So this day right here, headed lower, okay, and then had this huge buying tail and ended up closing at the highs of the day, all right, closing over that previous day's high. Notice what we did after that. Traded sideways, okay, this is not bearish yet, but then we ended up heading lower, and we actually broke the low of this day. If this day was bullish, then I would have expected, or you should have expected, a break higher over this resistance. Okay, it had its chance to do it, but didn't. Instead, we ended up breaking this little uptrend line and heading lower. And to me, this action here, to me, is just kind of a little oversold bounce that will likely get rejected anywhere below 23 bucks, and that will continue to make new lows. Now, conversely, okay, if work ends up bouncing here and closing over this resistance, not only would I sell this short here, but I would actually flip long. That would be a flipping long scenario for me if we ended up bouncing back here and closing over this resistance, okay, especially after this volume and this volume right here. That would be a long signal. But as it stands right now, it looks like a short trade to me, okay? And you have to give the benefit of the doubt to the trend, okay? The trend has been down. This stock has been doing nothing but go down, down, down. So as far as targets, I think it can hit about 17 bucks in the not so distant future. I'm using this little angle here that we have that's bounced, given this a bounce several times before. We haven't connected to it in a little bit, but I think that if we do end up breaking lower, that $17 is a nice little target. Could be a nice little bounce zone for a long trade as well, but just recognize that it would be a counter trend trade, and those are always riskier. Okay, so that's work. The next one is AYX, and I want to kind of discuss something about this stock. Just, my personal experience with this stock. This stock has some of the most cult-like following that I have seen in a very, very long time. And, I post about it on StockTwits many times. I even posted a watch list where I wanted to actually buy AYX, but because it was at a lower price than that it was currently at, I wanted to buy it about 70 bucks. People got up in arms, and they interpreted my watch list as saying that I was actually short the stock and that I was targeting 70. That is totally different than not being short and actually wanting to buy the stock at a lower price. So my point is that there's a lot of emotions on this stock, and this is not good for trading. So if you feel like you're watching this video and you're going to get triggered by just me making this video, then that's a problem. This is a problem. It may end up working out for you, and AYX will make all of your dreams come true. But I can tell you that being emotional about a stock or your investments is a very, very bad thing to happen. Okay, so let's get to the chart. So AYX, first and foremost, overall is still in a pretty decent uptrend. Okay, pretty decent uptrend right here. But if you notice, the behavior started to change. Okay, and it started to change right here on this big bearish day. All right. Now let me kind of zoom in. All right, so here's that big bearish day. Huge down day, huge volume right there. Okay, and it got followed through the next day right here with another big volume day. And then it headed lower. No surprise there after that. And then we started to kind of base here. And again, look at this volume here. Red, red, red. Big volume. And we traded sideways. And we headed a little bit higher. All right. Now we had our chance to break out right here. We couldn't do it yet. Hasn't done it yet. Traded sideways. Looked like it could be building up energy. But then what we have here is a break of this little uptrend line. Okay, and not only did it do that, but it broke it with, I think this is the second biggest volume day ever for this stock. Second only to the IPO day. Okay, second only to the IPO day. So basically, aside from the IPO day for this stock, this is the heaviest volume day ever. Okay, and the following day, right here, this was Thursday of last week, ended up closing below the previous day's low. Let me check to make sure. Close 94.63. The low of the previous day, 94.89. Yep. So it closed below the previous day's low. Very similarly to how we did over here. Big bearish day, and this, I believe, up to that point was the second biggest volume day for this stock. Second only to the IPO day. I'm pretty sure. Don't quote me on that. You'll have to look for yourself. Don't come yelling at me. That's not the second biggest volume day. It doesn't matter. All that matters is that it's the biggest. It's a very, very large volume day, followed by the next day another very large volume day, closing below the previous day's low. And as you can see, it kind of traded sideways a little bit for really a few weeks, but then it headed much lower. I am expecting something very similar to happen. Okay. The other hint to me was this day right here. Okay, this day was this big red day, closing below the previous 2 days' lows with some big volume. Followed by the next day, big gap down, and we barely closed green. Okay, yes, this is a big green day, but we only closed, a few cents above the close of the next day. And then we kind of headed higher. Okay, you thought, okay, maybe it can get a bounce, but then we traded sideways and then down. So this day was a very bearish day. Okay, it was a very bearish day. Now, if we closed over that resistance, then that would have negated any kind of bearishness, and it would have in fact been bullish. But because we traded sideways, we didn't really get a bounce, and now we're actually below those lows, and we broke those lows with a huge big volume day, followed by the next day, one of the biggest volume days ever for AYX, closing below the previous day's low, and then followed by the next day, basically just a sideways trading day. I think this stock is going to head much lower. It had its chance to break out after kind of basing here. You can consider this a base, and if it broke over the top side of this resistance, that would have been a nice little long signal. In fact, I actually alerted, and this is going to surprise a lot of people on the AYX board because they think I'm just some big AYX hater or bear or whatever you want to call it, but I don't subscribe to any kind of those labels. I don't really care about a stock. I trade stocks in both directions, and I don't have any kind of emotional attachment to them. So for example, I actually traded this on the long side right here, and we got stopped out on this day right here for a small loss right there, and we actually flipped short on that day right there. Okay, so just to kind of throw that out there, I don't hate AYX. I just think that it's going to head lower for all the reasons that I mentioned. Massive volume, okay, it doesn't always mean bearish, even if it's on a big red day with big red volume, okay? But it does mean that it's bearish if price moves in that direction. For example, on this red day, okay, we actually had a buying tail at the lows, and the next day was green, okay? And if we would have headed higher, just like I mentioned earlier, over that range, that would have actually been buying volume, okay? But we didn't get a bounce. We actually closed below the low of that day right there. Here's that support, boom, boom, boom. We bounced at support right here and here, but then we closed below it. So that was in fact a bearish day, followed by these two massive selling days. I think that AYX is going to head much lower. And the other thing that I want to mention too is the relative weakness to the rest of the market. The S&P 500 has been doing the opposite of AYX. AYX has been going straight down since September. Okay, if you look at the S&P 500, let's just look at it. If you look at the S&P 500, here is September right here. Okay, we've been going straight up. All right, and AYX has not been able to keep along with that. So those are my thoughts on AYX. I do expect AYX to head much lower. And a further confirmation, because it still has some support here, is if and when we do break these lows. Okay, because there's a little bit of sideways trading here, and that may give us some kind of a short-term bounce. So don't get your hopes up if we get some little bounce. To me, if we break over this resistance right here, that's going to be a long signal. Okay, but until then, I think it's going to head lower. And the further confirmation, to me, would be a break of these lows right here. So really a break of like $85 on AYX. I would say that if it breaks $85 on AYX, that would be the GTFO signal to me. Get the F out of this stock. Right now, we're still above this little support, so there's still a tiny chance that we could get a bounce. But yeah, a break of that would just be completely party over for this stock, and I actually will likely add to my short if and when we do that. Okay, so that's AYX. The next one is AVGO. Now, AVGO, oops, that's actually, I am actually looking for a long on AVGO, but it's much lower. Okay, and I might as well just discuss it right here since I have this chart up. So AVGO in a major uptrend. Okay, that's fact. And again, this goes back to, you know, what I was kind of discussing on AYX, is that I don't care about a stock, whether it goes higher or lower. It doesn't make any difference to me. There's a million other stocks out there, and I don't have any kind of emotional attachment to any stock going higher or lower. And I'm not just talking about myself. I'm trying to help you make better trades and investing decisions. Use these things as motivators and not something that triggers you. Okay, so AVGO, I do think it's going to head lower in the short term, but I am also looking for a buy spot down here. You can see major uptrend, bounce, 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 bounce. And then we've got this downtrend line that was broken over. So I think anywhere between about 290 to 280 is going to be a buy zone. Okay, so now I want to discuss the short setup that I'm seeing on this stock. So first and foremost, what we have here is a major resistance. Boom, 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 boom. We broke over it on the day before earnings was announced. Okay, and then as an earnings reaction, we actually gapped below and closed back below this resistance, closing below the previous day's low on one of the biggest volume days we've seen this year for this stock. So it had its chance to break out, couldn't do it, closed below the previous day's low. This is a bearish sign. This is what is considered, or what I like to call, a false breakout. We broke out over resistance. When you break out over resistance, you want that to hold. Okay, you want that to hold. You want it to hold over, either trade sideways or head higher, but you don't want it to break back below this level, especially on an earnings reaction. Earnings move stocks in both directions, okay? And typically when you have an earnings reaction, stocks will move in that direction for at least another couple months. So because of this false breakout, I think that AVGO is going to head lower. What would negate this setup is a break of these highs. So if it broke those highs, 330 or so, to me, not only would I not like this for a short any longer, but I would in fact like it for a long. And again, that goes back to not caring about a stock, not being emotional or having an emotional attachment. And it's not just about being in love with a stock if you're investing in it. It also goes to losing on a stock. And a lot of people, what they'll do is they'll lose on a stock, and then they'll be like, okay, I'm not going to trade this ever again. But then they might actually miss out on a trading opportunity. So to me, and you also have to be careful of revenge trading as well. There's a lot of things to factor in, but the key here is to not be emotional. It's just numbers on a screen, letters on a screen, what have you. Okay, so that's AVGO. I think it's going to head lower. The next one, LYV, another one with a bearish look. So LYV overall, longer term, in somewhat of an uptrend. Okay, these are higher lows being made right here. This is higher highs right there. But in the near term, oops, that's a little bit too much. Okay, this is perfect. So in the near term, we have been in a downtrend. Lower highs, lower lows, yada yada. So what we had here is a big gap down, bearish, okay? Boom, all that volume. Then we had this little, to me, oversold bounce that came into just to fill this gap and get rejected that resistance. To me, that's not necessarily a short signal. But what we have here is this massive topping tail, bearish day, tried to break out, and then ended up closing below, not only out of this little channel here, but below this support right here, support, 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 on, again, another massive volume day, okay? So I think that LYV is going to head much lower. I think it's probably going to tag 60 just based off of this little channel line that it's been bouncing off of. You can see it bounced at about 61, but as it goes lower, it's going to be declining as well. So I think at least 60 is going to get tagged. This big red day is your signal here with big volume right here. These are one of the biggest volume days ever for this stock. And yeah, I think this stock is going to head lower. So what you're looking at right now is the results here of all of the trades that I have alerted to subscribers here at thetradinganalyst.com. If you don't already know, thetradinganalyst.com is a trading alert service where I share real-time trades with exact buy and sell prices as they happen. Most of the trades get featured on watch list ahead of time, and we're tracking the open positions as well. So the watch list and the open positions are listed on a section on this sheet, and that's why I'm only showing you the results portion of this sheet, because it wouldn't be fair to our current subscribers if I showed you our open positions and our watch list. So why am I showing you this? I'm showing you this to show you that we get amazing results here in the market and on a consistent basis. The numbers here that you're seeing on this screen are the results here for the last almost 2 years. About 18 months is how long we've been using this portfolio tracker. You can see here that the average win is about 50%. The average loss is about 33% in gains. And another thing to understand here is that the majority of these alerts are for options trades. We do stock trades. About 85 to 90% are options, and the other 10 to 15% are for stocks. The average length in time here for these trades is 9 days. Okay, so what does that mean? That means here that each trade lasts about 9 days from the time that we open it to issue the sell alert. And that means that if you've got a full-time job, or you're a student, or you're a stay-at-home mom, stay-at-home dad, or if you just live a normal life like the rest of us and you have a lot of other things going on, this means that you're going to be able to participate and make money as long as you have your cell phone, because that is how we send out these alerts. And the average win here is almost double the size of the average loss from a money standpoint. And we're not only giving you exact buy and sell prices as they happen, but also risk sizes as well, capital deployment, so position sizing. So we're recommending a position size along with the actual buy price, and that is how we come up with these amazing results, with our wins being more than double the size of our losses here. And that's because we're more aggressive on our higher confidence trades. We're doing sometimes 2 to 3 times the average trade size on our higher confidence trades. And then on our lower confidence trades, we are scaling it back and putting less money at risk. Now, this doesn't mean that these lower risk or these higher risk trades that we're willing to risk less money on are all losers. It does not mean that at all. It just means that we're not willing to put as much capital at risk, and this has been able to provide us with amazing gains here in the last 18 months, $315,000 in total profits. These are total profits. That is not an account size that has grown to this value. This is total profits by following all of the alerts that we alert to subscribers here at thetradinganalyst.com. The wins, the losses, the break-even trades, everything gets factored in here to this total profitability. So I would like to invite you to join here at thetradinganalyst.com. Sign up today, and I'll start sending you these alerts right away. I look forward to helping you grow your account on a consistent basis, and I hope that you make that decision for yourself. I'll see you in there.